Hello again, everyone. This is Joe Hentges with Beyond the Chart, and in this technical analysis of the stock market video, I'm going to take a look at Friday's heavy selling and how the picture looks for the week, so stay tuned. Okay, we're going to start off here with the New York Composite, and as you can see, it was down 195 points. The Dow was down 310 points for the week or for the day. And you can see how it's gapped down dramatically here. This dotted line is Keltner channels. My Keltner channels are based on volatility. And so it's closed outside the Keltner channel. The other interesting thing is on a Mcclellan Oscillator, and I'll look at some of these indicators in a minute. We are at minus 256 here, and this is a Friday, okay? Here was a Friday. Actually, that's a Thursday. Here was a Friday. This Thursday closed outside the Keltner channel back in August. Here's a Friday outside the Keltner channel, and it's minus 227 on the Mcclellan Oscillator. And you can see what happened Monday, Tuesday. And here is one outside the Keltner channel for Friday and minus 256. So minus 256 and minus 227. So we're deeply oversold, and we'll look at that in a minute, but that doesn't mean we can't get even more sold, and especially in the wave structure of the movement that we're having to the downside. Let's take a look at the Russell 2000. And the New York Composite and the Russell 2000 have actually been acting weaker than any of the other major indices, and of course both of these are very broad indices, much broader than the S&P 500, for sure the Dow Jones Industrial Average. Now you can see the Russell over the last 5 days in here. Let's see, 3, 4. Okay, so here's last Friday, right? And so here's last weekend we talked about how it was coming down to this trend line, and then we smash through it and we break down below this potential support zone. To me, the next support zone is at the end of September, early October lows down here. You know, because this did not provide a support zone. I mean, it just blew right down through it and right back up through it. So to me, the support that I'd be looking at next is down around 1080 on the Russell 2000. Let's take a look at a weekly chart on the New York Composite, NYSE Composite. You can see the close here. It's the lowest close in 10 weeks. We come back down, close this gap here. But the 21-week moving average is pretty solidly down. The 55-week is rolling over. It's still trending down, but it's now even accelerating that curve a little bit. The 10-week is below the 21-week. So, you know, a negative, it's just reinforcing the negative picture. Russell 2000 on a weekly basis, same kind of thing. Let's see, 2, 4, 6, 8, 10. Lowest close of the last 10 weeks. And again, you know, the picture of the 21-week and the 10-week are pretty strongly down in this picture. So now it's not as negative from the standpoint of the New York Composite in this low back in here. Now, this got lower in the fact that the September took out the August, but neither one of these on the Russell took out it didn't take out the October low of October 14th, whereas on the New York Composite, you could see that August low took out the October and the February low of 2014. So the picture is much more negative. And when you zoom back out of this, you could see, you know, how it just looks like it's rolling over. It's going to lower lows, lower highs kind of thing. It's starting that trend, and especially if we take out this low, that's going to reaffirm that picture. Let's take a look at one of the indicators, the VIX. Look at how the VIX exploded to the high side here. It's just curving up. It's just ramping. It broke this trend line down. It's looking like it's launching. And when you look at the indicators on the RSI, I had drawn this trend line, you know, days ago, and it broke up through this in a nice little swing move. And the same thing on DI plus on the directional movement indicators. And look at the trending. Look at the ADX is rising. It's been rising from this low point of 15. It's now above 20, which definitely confirms a trending action going on. So there's solid trending on the VIX, and it just has, you know, a negative picture to it. Let me come back to the New York Composite. I want to go to the daily here. And let's look at the indicators on it. So here's the directional movement on the New York Composite. You can see the red is the DI minus, and it looks like it's breaking out of a trending there. The RSI swing moved to the downside, and it's gotten slightly below 30. And when you look at the Mcclellan Oscillator, we are, deeply oversold. There is no doubt. It doesn't mean that you can't go any lower like we did in August. So just have to keep watching on a daily, weekly basis and watching the waves. Right now, it looks negative. And we'll see tonight. Today is Sunday, by the way. Today is Sunday, December 13th. And tonight, there are two key Chinese economic indicators coming out, reports. One on, I think it's, one's on retail sales, and another one's on industrial production, I believe, of some kind. I can't remember exactly what it is. Let's take a look at the high yield bond fund. This has been in the news. It's been very negative. I've been talking about this since last year, if not earlier. And you can see how negative the HYG is now right here in this picture. We zoom out. Let me go to the weekly chart, actually. It just reinforces. I've had this picture of, I put a post on the website on Friday, had this picture in it. You can see we've got a big head and shoulders top, and you can see how it's broken this trend line from the 2009 low, and it's just rolling over. This is a picture of people saying they do not want the risk. It's risk off. They're exiting the high risk bonds, and that has implications for the market. Oil continues to push to the downside, continue to break to new lows. These are all-time new lows on USO. That's the picture on USO. And oil closed, I believe, let's see, it was $35.36 on West Texas Intermediate. Gold. This is a daily chart on gold. It came back down, closed this gap in here. I thought maybe it'd hold above this gap, but it came back down into it on the open and then just rallied up off of it. And the weekly picture looks to me like this reversal candle in here is trying to hold, and we got a little pause, and I'm looking, this is a possibility that this may be the bottom right in here. There's definitely a support zone. We're at the lower end of the declining triangle here, descending triangle, and so I am looking for a break of the 2-week high here and see if we can't resume the trend to the upside. All right, that's gold. And the last two things I want to look at is I want to look at the home builders and then energy XLF. The home builders, this chart looks, you look at that and you go, well, it's chopping sideways. One thing I want to point out before we go to the weekly, look at this bar. And a lot of the ETFs were like this back in August. If you're in ETFs, you need to be careful because, everybody, thinks they can get out of the ETFs, no problem. This action back in here in August when people, everybody headed to the exits at once. And I say that because what's happening in the high yield bond funds right now, the press that's in, is they're shutting it down. They're locking people. They're not allowing people to get out of the fund, and they're liquidating the fund on them. And so, that kind of stuff is just starting right now. So, you hear about that, and then you see the kind of illiquid action that happens when people are trying to get out of the ETFs. I'm just saying you need to be careful. So look at this on a weekly basis right here, home builders. And on a weekly basis, you look at the close for the week. It is the lowest close since all the way back here in January, since January 30th. This closed 34.29, and we closed 34.50. It is the lowest weekly close since then. So there's a real possibility that this thing is now starting to roll over, break down, and that's going to have implications for the economy. And then the last one, of course, is the Energy Select Fund. And that, this is the negative picture. It just keeps getting reinforced in here. And this is at 4-year lows on the weekly basis on XLE. And you got to go all the way back into 2011, this little blip down in here. And once we get past that, you're going to be into 10 and before. But right now, we're at 4-year lows on the weekly chart on XLE. So, all right, that's it for the weekend. Hey, if you liked the video, if you felt like it was helpful, hit the like button down below, and if you're not a subscriber, hit the little red button in the lower right hand corner and subscribe, and share the video. I mean, you can share these videos, share the links, send them to folks, that kind of stuff, embed them in a website, that's fine. And head on over and check out my website. So hope you have a great weekend. We'll talk to you again this week.